profit maximization versus wealth maximization. Financial management, short-term versus long-term thinking. The financial management has come a long way by shifting its focus from traditional approach to modern approach. The modern approach focuses on wealth maximization rather than profit maximization. This gives a longer term horizon for assessment, making way for sustainable performance by businesses. A myopic person or business is mostly concerned about short-term benefits. A short-term horizon can fulfill objective of earning profit but may not help in creating wealth. It is because wealth creation needs a longer-term horizon. Therefore, financial management emphasizes on wealth maximization rather than profit maximization. For a business, it is not necessary that profit should be the only motive, the only objective. It may concentrate on various other objectives or aspects like increasing sales, capturing more market share, etc., which will take care of profitability. So, we can say that profit maximization is a subset of wealth, and being a subset, it will facilitate wealth creation. So that means profit maximization is also important for having wealth maximization. Cash flow is important in wealth maximization. Giving priority to value creation, managers have now shifted their focus from traditional approach of profit maximization to modern approach of financial management, that is wealth maximization. This leads to better and true evaluation of business. For example, under wealth maximization, more importance is given to cash flows rather than profitability, as it is said that profit is a relative term. I mean, you can also say that it is a vague term. It can be a figure in some currency, it can be something in a percentage, etc. For example, a profit of say $10,000 cannot be judged as good or bad for a business till it is compared with investment, sales, etc. Similarly, duration of earning the profit is also very important. That is, whether it is earned in short term or long term, or in 10 months or 12 months or 5 years. In wealth maximization, major emphasis is on cash flows rather than profit. So, to evaluate various alternatives for decision making, cash flows are taken under consideration. For example, to measure the worth of a project, like criteria like present value of its cash inflows, present value of its cash outflows, that is net present value, is taken into consideration. This approach considers cash flows rather than profits into consideration and also use discounting techniques to find out worth of a project. Thus, maximization of wealth approach believes that money has time value. Now, the question is how to measure wealth. An obvious question that arises now is that how can we measure wealth? Well, a basic principle is that ultimately wealth creation should be discovered in increased net worth or value of business. So, to measure the same, value of business is said to be a function of two factors, earnings per share and capitalization rate, and it can be measured by adopting following relation. Value of business is equals to EPS divided by capitalization rate, that is earning per share of that company or business divided by the capitalization rate it should use. Agency problem. At times, wealth maximization may create conflict known as agency problem. This describes conflict between the owners and managers of firms. Conflict in the sense the objectives are conflicting, that is of owners and managers. As managers are the agents appointed by owners, a strategic investor or owner of the firm would be majorly concerned about the longer term performance of the business that can lead to maximization of shareholders' wealth, whereas a manager might focus on taking such decisions that can bring quick results so that she can get credit for good performance. However, in course of fulfilling the same, managers might opt for risky decisions which can put the owner's objectives on stake. So the conclusion, hence a manager should align his or her objective to broad objectives of the organization and achieve a trade-off between risk and return while making decisions, keeping in mind the ultimate goal of financial management, that is to maximize the wealth of its current shareholders. Thank you. Happy reading, and if you like the video or the post, please feel free to share or comment. Thank you so much.